Thanks for your company for the monthly wrap. My name is Jessica Amir. I'm with Bell Direct. Well, what a phenomenal month and start to the year we've had. The Aussie share market is up 5.2%. That's if you look at the benchmark ASX 200, a whopping start to the year with the broader All Ordinaries up about 5%, followed by the Small Ordinaries lift of over 3%. Looking at the ASX 200 alone, it's been the best yearly start to markets since 1983, with the market hitting that new record all-time high last week of 7,145 points, meaning the market was 7% higher year to date. But since then, we've had investors locking in some profits amid the coronavirus outbreak. However, sentiment does remain strong across markets for a couple of very important reasons. One, better than expected Aussie economic data, less unemployment, high inflation, both readings closer to where the central bank want them to be. Better than expected US economic data also helped with their rates remaining on hold in the US, with the Federal Reserve Chair saying the labour market remains strong and employment participation is continuing to rise, and earnings season in the US is also helping keeping the major indices in record neighbourhood, as 70% of the top 500 companies that have reported have beat forecasts. Plus, Apple shares hit a new record all-time high after reporting stronger than expected results. While, of course, don't forget that US-China trade deal. The first part of that deal, phase one, was inked this month, keeping sentiment high, while the Brexit is going ahead as expected. So let's look at the ASX 200. It hit that new all-time high last week. So when will it hit another one? Well, we don't know, but just looking at the historical numbers, it tells us that markets pretty much reach a all-time high on average every 19 days after an all-time high has been reached. That's if you look at the numbers from 1989, excluding the dry spell from 2007 to 2019. The numbers also say about 93% of the time a new all-time high was set within the next month. But what about the coronavirus? Well, despite what you read in the headlines, we had a look at the virus outbreaks and epidemics since the 1980s. They've all had varying impacts on markets, but this chart shows us from the HIV outbreak in 1981 to SARS in 2003 to swine flu, Zika and Ebola. All these events cause short-term impacts on markets, regardless of what was going on. Many other factors to consider, of course, but this is just looking at the numbers. What we also know about coronavirus is it's had an impact on Chinese and tourism-related stocks, particularly as China is the largest contributor to global growth and Australian tourism as well. We've seen corporate travel management lose over 13% this month, Flight Centre down about 9%, Webjet also taking a hit, with companies like these exposed to the Chinese consumer really being questioned by investors, in particular with their earnings. Sectors that have been standing tall since the virus broke out: healthcare, telcos, utilities, REITs, big dividend paying stocks, plus gold stocks as well. Let's look at the best performing sectors in January. Well, all sectors joined in the rally. Healthcare up the most, 13%, followed by tech stocks up 10%. Energy, the only lagging, but remained in positive territory though, really succumbing to pressure of the oil price as supply and demand concerns both weigh. Meantime, one of the standouts in the healthcare sector was the blood, plasma and vaccine maker CSL, also a top pick for reporting season according to Morgan Stanley, with a price target of $350. CSL shares closed at yet another all-time high as well on Thursday, $319 early in the day, in fact, and it looks like it could become the largest stock on the Aussie share market, taking the thunder away from CBA. Plus, there are also whispers mounting that CSL is developing a vaccine cure or some type of treatment for the coronavirus, as particularly this company, CSL, is the world's leader in vaccines and antibodies known as immunoglobulins. What other big stocks were on the move? Well, plenty. Polynovo continued to shine, rising 48% to another all-time high, $2.94, as its skin repair technology developed by the CSIRO continued to roll out across the globe, with its treatment now being used in the UK, Germany and Switzerland. Consensus also expects Polynovo could make a profit or break even for the first time this year. Afterpay also in the lead, up 30%, hitting a new all-time high after closing off their share purchase plan. Going the other way, aerial imaging company Nearmap fell the hardest, 28%, after announcing they lost a key US customer. But remember, this company was one of the market darlings last year, up almost 70%. And Treasury Wine Estates shares lost about 19% after cutting their full-year growth forecasts amid a challenging US wine market. And what to watch next week and beyond on the economic horizon? Well, in the US on Friday, economic data, GDP, is out with expectations that growth will remain at an annualised pace of 2.1% in the fourth quarter of last year. As for what to expect for the rest of the year, well, the IMF expects growth to drop from 2.3% clocked last year to 2% this year. Over in Europe, the European Union gave the nod for the UK to leave the EU, meaning from Monday next week, no UK lawmakers will be in European Parliament. And back home on Tuesday, the RBA is not expected to cut rates, and it's expected to keep the rate, the central interest rate, at 0.75%, as those two important factors, employment and prices, are getting closer to where the RBA wants them, meaning the economy is strengthening its muscle. Inflation, let's remember, rose 1.8% year on year in the December quarter, and food inflation in particular is expected to remain high for the first half of this year on the back of the bushfire and drought impacts. And don't forget, last but not least, confession season officially kicks off next week, so tune in each and every day. We'll cover what you need to be across in the main companies that report, with news in 60 seconds. And don't forget to tune in to our daily market updates on Bell Direct TV or on YouTube as well. Plenty to sink your teeth into. That's it from me. Take care, stay safe, and I'll see you next time. Bye for now.